Good morning, traders. Welcome to Wednesday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, we always need to check the news so that we know what's going on and when, so that we're not surprised by anything. So looking at the news calendar, this morning we've got some 8:30 news. The core CPI forecast is 0.1%. At 10:30, today is Wednesday, so we have crude oil inventories. That forecast is negative 2.266 million. We'll look at API in a second. Going on into the afternoon session, we don't really have anything else. There's some medium news announcements with FOMC member Brainard speaking. We also have the Beige Book at 2 o'clock, federal budget balance at 2 o'clock, FOMC member Harker speaking at 2 o'clock, FOMC member Clarita speaking at 3. So a lot of speakers this afternoon, but as far as the news, that's really about it. Now, crude oil inventories had a forecast, or has a forecast of negative 2.266. If we go back to yesterday, the API report, which comes out on Tuesday, will give us a clue in terms of what to expect. And here we can see that forecast is it came out at a negative 5.821. So it's likely that the report today will come out slightly more bullish than anticipated, a larger negative number, if you will. It's showing a -2, but we just saw the API come out at a -5. It wouldn't be a surprise to see like a -3 or a -4 and kind of split the difference. But that's really about it as far as the news goes. Pretty calm and quiet outside of that. So with that out of the way, now we can jump into some charts for today. Today's date, 1/13/21. Over on the NASDAQ first, we can see the market finally breaking out of the bear descending channel. The market quickly bounced off of the lows and pinged off of a deep L3 down into the 12,800s and then closed right back up. Big V bottom at the end of the day, and yesterday was basically a range. All things considered, it didn't really accomplish a whole lot. We opened here and it closed here. So it didn't really do much, all things considered. The wick is pretty extreme. But finding a lot of balance down here in a major zone of support, it's expected to see buyers try to push back up and challenge this bear move, especially with a V bottom. But usually when you get that kind of challenge, they'll break back above a level of support or resistance. In this case, it was previous support that tried turning into resistance and completely failed. Wouldn't be a surprise at all to see it backfill into that zone once again, and that would also fill the gap on a little bit of a pullback. We still have the open gap above, still waiting for the market to rally back up towards those 13,100s, finish that job off and get those taken care of. But as it stands, it seems like we're in a little bit of a balance, and it wouldn't be a surprise to see a bit of a downturn for buyers to pick it up a little bit cheaper. Over on the S&P, we had a very nice continuation rally to a new high, went screaming higher yesterday, just like the NASDAQ. Was a range, didn't really accomplish a whole lot, but on that big dip lower, it did manage to dig down and tap the L2 that we were talking about. So it had a fantastic bounce off of L2, rotated back up. Now we have some pretty bullish indication. Same situation that we were talking about on the NASDAQ, where we've got a breakout point. Typically, you want to see the market come back to that area. You can see there were a couple times before and after that it bounced off of it nicely, but it never actually made it down for a physical test. And that's kind of what the market's waiting for at the moment. We've got some good resistance coming in off the highs at the 3,800. It seems like to be the pretty difficult location, and now the market pulling back towards settlement. This is the area where sellers are going to try to take back over and get that move down towards a better price. Same thing as the NASDAQ. Buyers are interested, just maybe not way up here. Then we've got the gold market with a good bear press to the downside, nice continuation lower, and a big middle leg. And usually when we have this move lower, and the reason why I say a middle leg, when we've got this movement, typically you'll have that first drive, an extended second drive, and then the third drive, which is usually the same distance as the first. We haven't had that third drive yet. We've got the first drive down, the massively aggressive secondary. Now we're waiting for that third one, and because that hasn't happened yet, that opens the door for some potential. We've got sellers who are potentially looking for a new low down into the 1802s. We'll just say 1810s to front run it a little bit. But either way, that's, sellers still have the sentiment to try to break the market back down. And right now we've got resistance above that's just waiting. It hasn't been physically tested yet. It's still waiting to, actually get hit. And the fact that we're forming lower highs ahead of it shows quite a bit of selling pressure ahead of that zone. So it would be nice to see it maybe backfill. But then from there, back right off again, down towards the lows. On crude oil, we have some really nice continuation to the upside with an extended spike in channel. This thing just keeps going and going and going. Whenever you have a spike in channel that's this persistent, that goes on for this long, it usually starts to make you think, are we getting to the end? Normally, some indications of the end, things to look for would be overshots on the highs, led up with an immediate failure, right? Kind of like what we saw back here, except the immediate failure got picked right back up off of the lows of the channel and rocketed back higher. So the way that it's moving right now, we cycled off of a major objective. Buyers who are buying the channel lows just got the channel highs. That's a target. We're seeing buyers get out of the way and now dipping back into a zone of support. If the market can dip back below settlement, back below 53, preferably in towards the lower 52s, that's where buyers start becoming a little bit more interested. But don't lose sight of the fact that today is also an inventory day. With an anticipation of a bullish move, right? Or at least bullish numbers, negative, meaning they have less than expected. So they have to increase price to slow people down from buying it so they can produce enough to make up. And when you have that kind of situation, well, you have a very good market on your hand where it just keeps going higher and higher and higher. Now over to the euro, which is in a major turning point pretty much right now. This is the zone where sellers have been trying to drive the market lower. Arguably, they've done all right. But this most recent bull rally to the upside was no joke. And I think a lot of sellers who were short, that probably took their stops out. Realistically, whether people shorted from over here or over here, their stops will have moved down towards one of these swing highs, one of these little moves, one of these lows, whatever. And a lot of those sellers will have been taken out. So the fact that it ramped higher, I don't think necessarily screams that this was a trade. I think it more so screams that we did actually complete an objective down at the bottom. And if that allows for buyers to come back in again on another dip towards the 21,600s, that would be potentially the bottom for the rest of the day, where the buyers can rally it back up, ramp it back up to new highs, and then see if they can stick it up there instead. As it stands right now, it's a really sharp pullback. Bears seem like they're relatively strong, and we're coming off of the half DP up, and have now made a full deviation move all the way down. This is where it starts getting a little bit interesting. And then finally over to the crypto side of things with Bitcoin currently getting stuck at the top of the wedge, bounced off of the deeper bulls L5, but just hovering. It's not really doing much of anything, trying to go up, trying to go down, hanging out in the middle. It hasn't really moved either. This is another market where, looking at it from the grand scheme of things, from previous day's close to open, didn't accomplish much. It's a weak body with a lot of wick. It's not the first time we've seen that. The day before, right on the 11th, that's a little body, giant amounts of wick. It's something that is pretty normal for Bitcoin. But all of those wicks are happening down at the bottom, which would suggest that buyers continue to pick up the lows. It's a little bit of a concern, something to kind of think of when I'm looking at this. All the failures, every time it tries to push lower, it gets picked right back up again. Whereas when the market is going higher, it seems to go relatively uncontested. Nice new highs, nice new highs, nice new highs. Once it finally starts letting off the gas pedal, it drops down for buyers to reload, and same thing. It just kind of keeps on chugging along. So Bitcoin it's in a situation that's a little bit awkward because we're at the top of the wedge, but it is being picked up from the bottom nicely. It wouldn't hurt my feelings to see it go ramping up to the 500s, and then maybe breakout pullback for a continuation long. Alrighty, and that's going to do it for today. So like we always say, stay safe out there, keep those stops in play, and let those winners run. Until the next time, I hope you have a great trading day, and we will see you all tomorrow. Thanks.